Paul, what do you think? What's happening at the long end?
Yeah, morning, guys. So we obviously had another follow-through sale in longer-dated bonds, treasuries in particular, but right across Japanese government bonds and Australia and New Zealand as well. In Asia hours today, a third day of declines in bond prices in a row, pushing those yields about 50 basis points higher at the back end of the yield curve. Real steeper move than and much more aggressive than we're used to seeing, particularly in Asian hours as well. There's a lot of theories. There's not a concrete piece of evidence that tells us exactly what it is, but lots of people speculating on different factors that could be contributing to this. So favored among them seems to be banks liquidating their most fluid assets so that they can get cash to return to customers who need it, or investors needing it to meet margin calls. If you think about that, that might make most sense in the US hours, but the fact that the sell-off continues into Asia raises some question marks there. The second theory, it could be fears about inflation. The tariffs likely to be inflationary, particularly for the US. Big step up in prices. But again, there's problems with that because break-even spreads are actually much narrower now. The inflation expectations have been coming down, not rising. So some concerns about that one. What else could it be? It could be, a general boycott about US assets. Maybe investors don't like these tariffs and are finding ways to move into alternatives as well. You've got European and Japanese markets look a little bit more attractive, but then, like I said, the sell-off in Japanese assets too. Some people even saying, maybe this is a little bit of a warning shot from trade partners that don't like those tariffs. China could be liquidating assets, for example. The evidence for that is a little bit spurious at this moment, but that is one rumor that is starting to gain a little bit more traction and gain interest as well. And then there's the fear about the basis trade and whether that may be blowing up over time. And the more that we get these very sharp moves, the more that becomes a risk as well.
Yes, we had a list similar to that from a full, fixed income fund manager earlier on in the programme, and saying she didn't see any evidence of China moving yet, but it must be on their list, was the wording she had. What do you turn to in times like this then, Paul? I mean, the yen and certain currencies, not everything other than the dollar, but certain currencies getting some affection from markets as a haven.
Yeah, so it's fascinating because just when you need them most, some of these haven assets are starting to underperform, particularly the bond market. We haven't seen a great deal of gains for gold recently either. The yen and the Swiss franc both looking good, but they have their own problems. Swiss yields very low. You don't really want to be keeping your money there longer term. And the yen, has been a little bit all over the shop and buffeted by the volatility as well. So people definitely hunkering into the short end of yield curves, very short-term bonds, switching into cash where they can, and just holding money in reserve as a result. Looking for home markets and home bias as much as possible as well, and keeping their powder dry.